few days ago, people were wondering whether Zee will have some rabbit to pull out of its hat, the management at least. How will Mr. Punit Goenka ensure that he holds on to the position of MD and COO? What will the grand old man of the Zee Group, Mr. Subhash Chandra, do? And yes, that rabbit has been pulled out of the hat. A white knight has emerged in the form of Sony Pictures. So this morning, Zee Entertainment announced the signing of a merger deal with Sony Pictures. The board of directors has unanimously approved this merger. It will give Sony India a majority stake in the combined entity of close to 53%. Punit Goenka will remain MD and CEO as per this term sheet that has been signed by both parties. So literally, Sony has come to the rescue for Zee. A little later in the show, I'll play out an interview that I did earlier in the day with AR Gopalan, the chairman of Zee Entertainment. But first, let's listen in from my colleague Shrishti, who's taking us through the contours of the deal.
Well, yes, story of the day, big news coming in from Zee, where the board has given in principle approval for merger between Zee and Sony Pictures Network India. And as per the indicative merger ratio, the shareholders of Sony Pictures will now be the majority stakeholder in the merged entity with around 52.9% stake, and the rest 47% of stake will be owned by the shareholders of Zee. And Sony India promoters will also infuse growth capital in the merged entity as a part of the deal. But another big news in this development is that Mr. Punit Goenka will continue to be the MD and CEO of the merged entity, as he rescued himself from voting on the above matter. But apart from the deal, of other few highlights of the deals are as follows, where the majority of the board of the directors of the merged entity will be nominated by Sony Group, and according to the term sheet, the promoter family is free to increase its shareholding from current 4% to up to 20%. So these were the details about the current deal. Now talking about the synergies as well, so this is seen to be a win-win situation for both of these, because it is supposed to bring a lot of synergies where Sony will bring the gaming and sports channel, and Zee has a presence in the news as well, which will be differentiating factor. And we know both of these companies, where Sony Live and Z5, both the digital platform of these companies, have been doing exceptionally well, and the merged OTT offering will emerge to be the second largest homegrown OTT after Disney in India. Better bargaining power with the distributors, advertising synergies, corporate governance overhang is likely to fade away, where Sony will become the majority stakeholder. And as per the Elara Capital estimates, the combined entity could have a PAT of around 3,100 crores with a PE multiple of 216 to 17 times, and execution on the digital business will drive the re-rating further. And there's also a possibility that the Zee stock will have an upside from 80 to 100% going forward. That means the market cap could double for Zee.
The question is, do the corporate governance issues which caused Invesco, the biggest stakeholder in Zee so far with nearly 18% share, to call for an extraordinary general meeting and insist that there's a new board of directors and ask for Punit Goenka to go, do those concerns now go away, since there is capital infusion and a new partner coming on board, and Zee is going to be essentially merging into Sony? To answer some of those questions, I'm joined today by Shriram Subramanian, MD InGovern, J.N Gupta, founder and MD SES, and Karan Taurani, Senior Vice President, Elara Capital. Karan, let me begin with you first, and just before we get to the corporate governance issues, etc., talk to us about what this new combined entity means for the Indian media landscape. When you add a Zee and a Sony, you get about 70 plus channels, you get 2 OTT platforms, you get 2 studios. What does this behemoth look like now?
So, as you rightly said, it's a very big opportunity, right, for the India industry as a whole. If you look at the broadcasting industry, I think Star is clearly the market leader in terms of revenue market share. They are right now close to about 20% and both these entities will come somewhere in line with Star TV, in terms of revenue market share. In terms of viewership share, clearly, they will surpass Star. They will go, beyond 24%, and Star is, somewhere around 20%. So it's going to be a win-win, because consolidation is the need of the hour. Broadcasting industry has seen a huge transition. We've moved away from, double-digit ad revenue growth towards high single-digit ad revenue growth. Currently, we've moved away from double-digit growth on subscription revenue towards high single-digit growth right now. So I think consolidation is the need of the hour, where the companies come together, have operating efficiencies, and come back as a big company. So I think on the broadcasting play, definitely there are synergies, because if you look at the presence of both these companies, Zee as a company is more focused in terms of rural GEC, and also in terms of regional genre, whereas SP and Sony Pictures as a company is primarily focused in terms of sports, kids genre, and also the mainstream Hindi GC, where Zee is primarily poor. So I think there are more synergies. There is less of overlap. So I think it's going to do a big deal, for them to compete with a large company like Star. And I think eventually, if the execution is good enough, I think they can, surpass Star by a margin, and also become the number one broadcaster today in terms of revenue market share. As far as the digital business is concerned, I think there too, of course, there are synergies. I mean, you are going to see a state wherein both the OTT platforms can come together. They can invest heavily into content. They can distribute together, go to market together, be it international market, be it the domestic market, everything put together. But I think on the OTT front, there is still a lot of work to be done, because clearly,
Right.
firstly, in terms of content strategy, if you see, Z5 is largely regional, Sony Live is largely Hindi web series domain led. But there is work to be done, because the ad dollars are clearly, kind of very heavy towards YouTube, MX Player, Hotstar, all these kind of platforms. So I think more work in terms of more creativity, in terms of content strategy, more innovation in terms of content is something, which will kind of
Yeah.
get them closer to the
No,
larger
sure.
players.
Yes. Yeah, so they have their work cut out for them, if this entire thing goes through. And I'm saying if, because at the end of the day, the shareholders have to approve this. J.N. Gupta, we spoke last time round on this subject when Invesco had first raised that red flag. And you had a comment to make on the promoter family, saying that despite all of the concerns that have been raised, one should give them credit for the fact that they pledged their own stake to save the company. And now this is this new twist that the family has managed to pull out of their hat, a new rabbit they've managed to pull out of their hat and get Sony on board. Do you think this will go down well with shareholders?
Again, I cannot speak on behalf of the shareholder or management of the family. I can only speak what I see happening. It would be very wrong to say that Punit Goenka has found a white knight and he has pulled a rabbit out of the hat or something like this. I would say the two companies, because I will never say Punit Goenka is Zee Entertainment or Zee Entertainment is Punit Goenka. It is not. A company has found another partner and they are willing to go together hand in hand. That is one. I would not say. The fact is that even in the joint entity, they have said that Punit Goenka is going to continue as the chief there. That very clearly establishes that not only for the G, but even Sony believes that Punit Goenka has the mettle to lead this media company forward. So that you got to give devil its due. The fact is that even after the G had problems, the Invesco and other investors had continued with Punit Goenka, and new investors, Sony is also, which is going to be a majority shareholder, is still continuing with Punit Goenka. So that means there was not an issue of the leadership or vision or capability. The issue was only on those abusive related party transactions which are past, which are not there. Now, one thing we got to see, that can we say that somebody will become permanently untouchable because of a sin? If the sin has been removed, a person has realized his mistake, then you can't be making him untouchable. That is what I say. So going forward, even all those residual issues of governance should be settled, and it should come out as a clean company. And having realized that they have lost their 60% holding, which has come to 4% because of one crime that they committed. So I don't think they will ever do this again in life.
You know what's interesting in this term sheet is that the promoter family has the option to increase their share up to 20%, if I'm not mistaken, from their 4% correctly, which they have currently. Shriram Subramanian, how do you think shareholders will respond? And of course, I understand you're not speaking on their behalf, you're giving us your point of view, but it will be interesting because the shareholders did have a certain set of concerns.
No, good evening. You have to look at it from a perspective of what are the alternatives that the shareholder had, right? At one end, there is Zee as is, it was running, and then an investor came, Invesco, and then they wanted the MD removed. But Invesco did not picture or give a picture of an alternate scenario to what is going to happen, right? Who's going to be running the company? What are they going to have a different business plan, etc., etc. And as Mr. Gupta said, the issues with Zee is not Zee itself. Zee obviously as a stock has underperformed because of the governance issues which the family had in other businesses in the Zee Group. But Zee Entertainment as a listed company itself has very good operating profits, is the market leader, if anything, and continues to actually reduce its debt. So from that perspective, if the governance issues are ring-fenced, shareholders would have found it very nice. So this deal, by its very nature, presents an alternative to investors, right? I mean, at one end, Zee as is going forward, at the other end, Invesco not showing any other alternative plan, and this is the third, which is wherein there is a large international media company, Sony, coming in and having a controlling stake, 53% odd. They are going to be majority on the board. They are going to do a thorough due diligence, but they are plunking in $1.5 billion, mind you, as cash infusion. So at the end of the day, if that is the case, which of these three scenarios would shareholders prefer? Obviously, it is number 3 as a scenario. As of now, these are the 3 alternatives in front of them, and they would prefer number 3. So that is a positive for the company, and that is, I think, through the day shown in the stock price also. But at the end of the day, unless there is an alternative plan or alternative proposal by anybody else of the scenarios now, this is the best one for shareholders.
No, absolutely. You know, I will still stick to calling this quite a twist in the tail and perhaps a rabbit pulled out of the hat, even though Mr. Gupta is not liking that term, simply because till 2 days ago, everyone was writing this whole situation off. Karan, I want you to come in on that. How do you think big shareholders will now look at it? Do those corporate governance issues sort of fade into the background, considering that yes, Mr. Punit Goenka will still be in charge, but Sony will have a large presence on the board, and it seems to be a win-win in that sense. I mean, the fact is, a couple of days ago there were media reports saying that what will Mr. Punit Goenka do, and is his departure imminent? He is now at least found himself in this position for the next 5 years. They've managed to hold on.
You know, there has never been questioning in terms of the capability of Mr. Punit Goenka in terms of he managing Zee as a company. I mean, if you look at Zee as a company, where they were and how they've come across this long journey, they are today one of the most profitable broadcasters today. If you look at their profitability margins, they've gone a long way in terms of creating this entire recall into regional genre, and they've given very stiff competition to even the local players in some of the languages. So I think the kind of intent, the capability, the strategy, execution has been just perfect by Mr. Punit Goenka. That was never the question. I think the only question was the corporate governance, the related party transactions, and you know, with SPN coming to the picture, you know, something which is an MNC going to be controlling the entire board, I think that issue will kind of evade away. And if you look at this, I think this is, if you know, things go as per planned, and you know, this entire deal actually comes across and doesn't fall off, you could actually see Zee becoming a very good structural story from a medium to long term perspective, you know, for the shareholders, and creating value and wealth for them. Because clearly, no doubt, there are concerns in terms of linear broadcasting. You know, there's an issue there in terms of growth and everything put together. But I think both these entities coming together can become a big powerhouse. I mean, look at the kind of content both of them have in terms of catalog of films and everything put together. I mean, they'll give any of the global OTT giants a run for the money. So the point I'm trying to make is that good execution on digital, you know, will go a long way in terms of creating shareholder value and wealth.
Mr. Gupta, you wanted to come in on this point?
Yeah, I said that it is not a question whether I like the phrase rabbit out of the hat or something like this. No, it's not the question. The question is this, that everybody was asking whether it will be done by Punit Goenka. I say, don't give only credit to Punit Goenka. It is the two companies which are coming together. Punit Goenka is one person, maybe the strongest person in the G side, but he is one. The other thing I would say, it's a situation today. There was a opportunity which was available to Sony. There was an opportunity which was available to G, and both have decided to encash the opportunity. Coming to the Invesco thing, if you recall my interview, I said, I do not know. For the simple reason, Invesco, and I would say that even last year when Punit Goenka appointment had come, we had said yes. And one of my clients had questioned me that why you have said yes. So I had to explain to them, and I will give you the same explanation. I said when the new investors came, they removed everybody, but they did not remove Punit Goenka. That means even 2 years back or 3 years back, the new set of investors had a confidence in Punit Goenka. And my only question to Invesco was that has the governance gone down further from last 3 years or it has improved? If it has not gone, if it has gone down, show us something which is not in public domain. Because when you read the balance sheet, when you read the annual report and director's report, you don't find anything wrong. Neither the auditors have said. So if things have worsened, please educate the investors and tell them what has gone wrong. Otherwise, you have not given a cogent argument to replace the board. That was my point.
Sure. Karan, while I have you here, I just wanted your comment on this non-compete element to the agreement. What do you make of that?
I think that is a very regular thing. It is there in many of these agreements which is done. So even when Sony was in talks with to acquire a stake in Viacom, they had a similar kind of a thing. When things were reaching the due diligence stage. So I think there's nothing different as compared to other deals or contracts.
All right. In any case, it is quite a turn of events that we have seen. And definitely the promoter family, Subhash Chandra and Punit Goenka, have made sure that, they have used their acumen, which has kept them on top of their game for so long in this case as well. Thank you so much to all of you for joining us on this conversation today. I want to play out for you an interview I did earlier today with Mr. AR Gopalan, who is of course on the board of Zee Entertainment, and asked him about the contours of the deal, what it really means. Stay tuned for the last question, where I ask him what the new entity will be called. Will it have the name Zee in it, or will it have the name Sony in it? Mr. Gopalan, it's a big day for Zee. Can you explain to us the contours of the deal and what the objective is?
You see, the fact is that, both Zee and Sony in India have linear area operations. They have got a OTT, they have got production studios, they have got a whole lot of infrastructure which are there for their own program. Now the question is that if it is combined, possibly there are areas where their strengths can be taken into account, and obviously the synergy between the two can expand the reach, get increased market share, may result in more revenues, and obviously that will be a good deal for both the shareholders. So, taking all these factors into account, now there has been understanding reached as we have now are going to do a due diligence study, which is exercise which will go on within the stipulated time. And then obviously we'll have to go back to the shareholders with whatever findings are. And shareholders will have to approve at that point in time if they think it is a good deal for them.
Do you have any concerns, Mr. Gopalan, about shareholders approving, considering that one of the large shareholders, Invesco, has had doubts about the board and about the continuation of Mr. Goenka? Do you think that this new deal changes the context?
I don't know. I don't have a clear answer to what you're saying at this point in time. But all I can tell you is that market has reacted very enthusiastically to the news which has come out today, one. And two, it is a little, what do you call, a funny thing where one says Mr. Goenka should not be there, the other says yes, he should be there for 5 years. So I think it's a probably the perception of the companies as to who are good persons to lead, deliver results, and increase the shareholder value. So I think there is probably a difference in what you call thinking of the two, between the two investors. But obviously, both are pitched in. So one needs to see how the shareholders are going to look into all this and then take a call.
Yeah. No, but do you see any kind of challenge in getting the shareholders on board with this decision?
Well, it is too early to say today. If the benefits of both this particular step is recognized, or if in due diligence they turn out to be true, and I hope the shareholders today have reacted based on the fact that probably the due diligence would be okay. That's what one would surmise at this point in time. So once those things, kick in when they are identified appropriately, and if at that time the shareholders see there is value in this merger, I think they will certainly take the step of what is beneficial to them, right? So it is up to them to see, for them to see what, how they perceive this deal to be in their interest. Let us see as we go along.
Yeah. Talk to us a little bit, Mr. Gopalan, about the synergies between the two companies, between Zee and Sony, because they are strong in different spaces, but there are some elements of overlap. For example, there are two OTT platforms. There is Z5 and there is Sony Live. There are two production companies in the movie space. Do you envision some streamlining going forward?
Well, I think these are matters which certainly will be have to come into focus. Obviously, the shareholder value has to be increased. These operations must be made more efficient, which would mean that synergizing the usage of some of this, and also trying to see how costs can be, reduced across, and how operations can, even with this kind of cost, how efficiently we can carry out operations and then try and get the revenue out of it. A lot of things have to be looked into. Initially, based on certain understanding and certain numbers, this deal has been worked out. Obviously, it's going to take time. The due diligence period is there. During that time, all these issues will certainly be addressed. And then we will have to recommend to our shareholders. We will have to recommend to our shareholders, and they will have to recommend to their shareholders. And the both shareholders have to agree, right? So it's a process.
Right. So when you say streamlining of operations, yes, surely, sir. I just wanting to get a sense if the process and the actual, execution will have to include rationalizing things like costs, including employee costs.
Too early to say today. It is possible that with the existing employees, there could be better turnout of, events, programs, and those kind of. It is possible. The number can get increased, which can result in good revenue. And therefore, the cost of having all of them would also be can also get neutralized, or as you suggest, that can also take place. So all I am trying to tell you is that this is too early today to make a guess on those things. But this is not a rocket science. You know, you and I know it's not a rocket science. So all these things will have to be looked at with a very, very proper way, so that maximization of the benefits to the shareholders is being attempted. That will be the major objective which we will be looking into before we take a call.
One last question, Mr. Gopalan. I know you are short of time. What will be the name of the new entity? Will you retain the brand name of Zee or of Sony?
We are merging with Sony. Zee is merging with Sony. That is what the deal is.
So the brand name of Sony, so the brand name of Sony stays and Zee does not.
Well, I mean, I don't know what has been any discussions has taken place on that or not. All I can tell you is that this is a merger of Zee with Sony. So you can, what will be the correct thing to do? Maybe the Sony's name obviously will be there. Let us wait and see. Let's not, jump the gun at this point. It's only today we have done the whole thing. So I hope there is still time to look into all this.
Sure. Thank you so much for your time, Mr. Gopalan, and for sharing all of those details today. R. Gopalan speaking to us. Thank you, sir. Mr. R. Gopalan speaking to us on a very important day. And for the media landscape in India, definitely an extremely important event, the merger of Zee into Sony, as was clarified by Mr. R. Gopalan. So it's Zee going into Sony. The new entity's final brand name is yet to be decided, but it's clear that Sony will definitely be there. We'll have to see if Zee remains and in what capacity. Another important point made by Mr. R. Gopalan is that they will be looking at operationalizing, streamlining operations, including costs, making it a more efficient combined entity, and this would include re-looking at their employee base. They could look at reducing the employee base or even expanding if the need so arises. The next big challenge, of course, is to get an approval from shareholders, which we'll have to see what one of the biggest shareholders of Zee, who had an issue with Mr. Goenka at the helm, will have to say about this.